The Terra community was expecting a vote on Kwon's proposal to revive the ecosystem today, but were left with nothing but questions as of Wednesday morning in Asia. Welcome to the Daily Forkast May 18th, 2022. I'm Megha Chaddah of Forkast, covering all things blockchain. Well, the dust still hasn't settled on the Terra saga, and many questions are emerging from the wreckage of lost investments for Terraform Labs co-founder Kwon. We'll take a look at that plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's kick off with the surprise re-emergence of China as a major Bitcoin mining hub. A study shows that the country accounted for a fifth of the Bitcoin mining network hash rate in the final quarter of last year, despite a ban. According to data from the Cambridge Center for Alternative Finance, or CCAF, from September to January, China accounted for 21% of the total global Bitcoin mining hash rate. That's quite the turnaround from last July, when data suggested mining activity in the country had fallen to zero following a series of crackdowns beginning May 2021. In a statement, the CCAF said the data strongly suggests that significant underground mining activity is happening in the country. It added that access to off-grid electricity and scattered small-scale operations are among the most common means used by underground miners to circumvent the ban. Chinese authorities have yet to react to that study. Meanwhile, in India, the country's financial watchdog has advised against the endorsement of crypto products by prominent public figures, including celebrities and sportsmen. Based on local reports, the Securities and Exchange Board of India, or SEBI, said that crypto-related advertisements must disclose how crypto dealings could be in violation of local regulations. Trading cryptocurrencies is not illegal in the country, but the activity is not regulated and is categorized as virtual digital assets for tax purposes only. You can find those stories and more at Forkast.News. And now on to the ongoing Terra saga. The multi-billion-dollar collapse of Terra's stablecoin UST and its Luna token is still ravaging the crypto industry, with many questions yet to be answered by Terra's founder Kwon. Meanwhile, a vote on the proposed hard fork for the blockchain was expected to go ahead today. Forkast Danny Park takes a look at what we know so far and what might happen next.
Over a matter of days last week, the UST slipped from its US dollar peg before losing its grip entirely. As of Wednesday morning in Asia, it was worth less than 10 cents. Its sister cryptocurrency Luna followed and is now worth just fractions of a cent. According to CoinGecko, the combined collapse evaporated an estimated $45 billion US dollars. Numerous Twitter users have claimed they lost their entire life savings, while moderators of the Terra Luna thread on Reddit have posted numbers for national helplines for anyone feeling overwhelmed by their losses. So what went wrong, and will investors ever see any of their cash again? Many are now digging deep to find the root cause, with South Korean media reports questioning why Terra's offices in Busan and Seoul were closed around 10 days before the depegging happened. Documents available from the Supreme Court of South Korea show that the decision to do that was made at a shareholders' meeting on April 30th. Terra has not responded to requests for information as to why, and Kwon himself has not picked up calls to his South Korean phone number or answered chat messages. Kwon's whereabouts remain unknown, though one person did try to find him, allegedly banging on the door of Kwon's private residence and demanding to see him before running away. They have since been identified as Kim, an online crypto investment streamer who goes by the screen name Chances. He claims to have lost $2 million US dollars in Luna. Local police have confirmed with Forkast that Kim turned himself in via a phone call. After his police investigation, Kim remarked to local media that Kwon needs to apologize publicly and come up with a plan for recovery. And he's not alone. Over 1,500 people have already joined a South Korean online community aiming to file a class action lawsuit against the two co-founders of Terra Luna. However, Korea's National Office of Investigation said that as of Monday, that no complaint against Kwon had been filed. And while police are closely monitoring the situation, there isn't a plan to start an investigation on Terra yet. One expert told Forkast recovering crypto losses is difficult in the country due to a lack of institutional background.
상품을 판매하는 금융사에 설명하는 약관에 의해서 그 동의된 범위 내에서 구매자는 어떤 피해가 발생했을 때의 보상이나 배상을 받을 수 있습니다. 그러나 현재 그 코인인 경우에는 제도권 내에 없기 때문에 그러한 약관 자체가 존재하지 않습니다.
Kwon called for speedier legislation of a comprehensive crypto law in the country that would provide guidelines for investors and businesses to prevent another fiasco like Terra Luna.
가이드라인을 보고 국민들도 내 피 같은 돈을 투자를 할 것인지 말 것인지 의사결정할 수 있는 기준이 된다는 것이고, 또 현재 사업자나 새롭게 진출하려고 하는 사업자들도 그래, 이 정도면 우리가 생각하고 있었던, 구상하고 있었던 사업의 가치가 있어 아니면 없어 판단을 할 수 있는 기준이 되기 때문에.
In the meantime, though he has not appeared in public, Kwon has surfaced online, proposing his Terra Ecosystem Revival Plan 2 on Tuesday. It suggested a hard fork for the Terra blockchain, creating a new fork called Terra and renaming the original chain Terra Classic. However, the plan was not well received. Over 5,000 members of the Terra community had taken part in a preliminary vote by Wednesday morning in Asia, with 92% of them saying no to the idea. Meanwhile, some were questioning why an official vote on the plan, which was expected to happen during Asia hours today, had not begun by around 9:30 a.m. Hong Kong time. An updated and final version of the plan then appeared late Wednesday afternoon, omitting any specific mention of a fork or of a vote. We'll be keeping watch on what happens next. For Forkast, I'm Danny Park.
Crack in the crypto markets hasn't spared the world of NFTs either. Some of the biggest and most popular NFT collections like the Bored Ape Yacht Club and other deeds have lost between 30 to 60% in the last 7 days. What's led to this decline, and is this a buying opportunity? Let's find out from Crypto Slam's NFT relations strategist Yehuda Pecha on what he's looking at on NFT Insider. Great to see you again, Yehuda.
Good morning, Megha. Great to be here with you again.
We are seeing hefty losses on collections like the Mutant Ape Yacht Club, Other Deeds, which is also from the Bored Ape creator Yuga Labs, which was launched just about 2 weeks ago. That's lost more than half its value. What explains these corrections?
It's kind of the perfect storm for Yuga Labs. First, you have their really poorly executed Other Deeds public sale, and then we entered a pretty significant bear market. And on top of that, Yuga Labs gave each ape and mutant a free plot of land. So people bought those, the apes and the mutants, with a plan to sell them after claiming that land. The rarest lands are worth hundreds of ETH, so for many people it was worth buying the ape or mutant at that high cost, like up to 150 ETH even, just for the chance of scoring one of those land plots. That type of trading action is really common after a project releases new NFTs. So the correction that we're seeing, it's pretty typical, and I think many NFT investors plan for it. I would say nobody in the NFT space is actually concerned about that price. If anything, people are anxious to buy more at this discounted price.
Do you think this recalibration of the markets would shake out the weaker projects? Should one be buying the declines in big NFT names?
It is. Everyone's been preparing for a major shakeout. It's almost become a legendary tale or a prophecy that in the future, 99% of all the current NFT projects, they'll be worthless. They'll be worth zero, and maybe that's now. People should be really cautious because I'm not so sure that the bottom is in, but if you had your eye on some of the bigger name projects like a CyberKong, like a Meta Hero, like a Kutars, this is definitely a better time to buy than during the actual bull runs. We at Crypto Slam, we're actually part of the process of discovering how low these prices can get. 2 weeks ago, we launched a new marketplace called Dropping Now, where the price of every listing will keep dropping all the way to zero. So we're seeing prices that are significantly lower than the OpenSea floor. It's really interesting. And the advice I have for people is if you are shopping, just go for the lowest price wherever you can find it.
But not all is lost, as Azuki has had some interesting moves after its creator admitted to leaving his older projects in the lurch. The floor price fell to about 10 ETH after that announcement, but it's back to trading about 50% higher from those levels. What do you think?
Yeah, it's typically a death sentence when the trust is broken between the project creators and the investors. That might be the case with Azuki too, but so far they're holding up really decently. I'm just not convinced with all the anonymous sales and purchases that we're seeing that it's not actually the Azuki project team itself propping up the prices. Personally, I'm looking for and I'm rooting for trustworthy teams and builders that have a track record, a great track record. So I wouldn't touch those Azuki NFTs myself. But an interesting point is that the Azuki founders' previous project, the CryptoPunks, they actually showed us that the community can take over a project and they can steer that project and lead it to success. And hopefully that's going to happen with Azuki. Traders, NFT traders in general, they need to demand better projects and they need to demand better project leaders, because as long as people are happy to hand over, these millions of dollars to these anonymous teams that are offering just a picture, we'll see more stories like this, and most of them will end very poorly for investors.
And what about CryptoPunks? They seem to have escaped the carnage that's seen in other prominent collections.
CryptoPunks, they can't be beat. They're I can't hide it. They're my favorite. Blue chips are considered a store of value, and they're much less impacted by these bear markets. Historic NFTs, even more so. And since, again, we believe that 99% of the projects out there are going to be worth nothing, what's that 1% that's going to survive? It's the CryptoPunks. It's the project that was the inspiration for Bored Apes and the entire profile picture craze that we're seeing. And even they're responsible for the NFT tech right now, specifically the ERC 721 token standard. So CryptoPunks are always going to be the safest buy in NFTs because their value is in their significance, and that can't be changed. This is actually a not widely known piece of info, but the first iteration of CryptoPunks are called V1 CryptoPunks. They probably cost 10 times less than the world famous CryptoPunks that people know of. And really, I think they're more historic than those V2 CryptoPunks because they were actually Larva Labs' first minted NFTs. So especially in a bear market, that's what I'm working towards.
Well, the V1 CryptoPunks found themselves in quite a bit of legal hot water some time ago, so very interesting history there. But like you said, quality is always going to hold out, and it's going to be the barometer for the projects that do well. Thank you so much, Yehuda, for joining in, as always.
Thanks again.
And that's the Daily Forkast from our vantage point right here in Asia. For more, visit Forkast.News. I'm Megha Chaddah. Until next time.